we have to ask the question and ask you, what's your plan? And that forms the basis of a conversation that we have this hour. Joining us as we look for a strategy for later days in terms of what your plan is Christine Mutahi. She's the General Manager of Business Development, Corporate Business at ICEA Lion Life Assurance, and she's here in the hot seat this morning. Christine, good morning.
Good morning.
How are you doing?
I'm great, thank you.
Karibu sana.
Asante.
Welcome to the hot seat. This is a big one. We don't want to talk about plans so much, or we just hope that the plan will somehow come together. Yeah. But you may see, with you being here, it's quite obvious that maybe we need to put in a little bit of elbow grease to make sure that that plan comes to be. So we'll be talking about quite a number of those things this morning. So thank you for joining us.
Thank you.
As we usually do, we go around the African continent every week, come back from a particular country with their proverbs. Okay. This week we are in Guinea, and we'd love to get your interpretation of this as we start off.
Right.
The man on his feet carries off the share of the man sitting down. The man on his feet carries off the share of the man sitting down.
Okay, interesting. I would think the man on his feet is up and about, quite active, doing one or two or three other things. And so he's definitely likely to have more than the one who is, just there laid back and perhaps not very active. And so the man on his feet has a plan.
Yep. If you're up and about and you do, with it, then you're the one with the plan.
Yeah.
All right. Love it. Okay. So the plan is what we've spoken about this quite some months ago. Yeah. And then even, just recently, weeks and a few days ago, we've been asking the question and maybe answering, and we've been saying, okay, well, ICEA has a plan for you, but then let's start from the very beginning, that we look at life and we talk about later and tomorrow and a rainy day and all of that.
Yeah.
Why are we focusing on all of this?
I think it's important because as much as we have, some people who don't want to think about much later, because the young person will say, I don't want to think about retirement. I mean, it's too far for me. It's too far-fetched for me. But then the question I ask is, even today when someone woke up, they must have thought about how their day was going to pan out or what they were going to do. And so planning starts at the very basics of even how my day is going to look like, or what I'm going to eat, or what I'm going to do next week. And so planning is a very key component of each and every one of us, even for the children as they're in school. They're planning for the exams, so they're sitting the exams, and so there has to be a plan. And so in life, then we look at from whatever stages of life, from whatever phases of life, or whichever walk of life that I might be at, I need to think about what's going to happen tomorrow, what's going to happen in maybe a few years, in my later years. Yeah.
I'm just wondering, Christine, because strategy for later days, what's your plan? It means that there's more or less like a re-strategy. I almost said re-strategization of ICEA business plan and all that. Yeah. But what is the major challenge that you are seeking to deal with?
All right. So as in the past, especially in the insurance space or in the investments world, I think there's been some misconception that only a particular cadre of people can be able to either afford insurance or investments to a particular extent. And so what we were seeking, or what we're still getting into, is to address the larger part of the population that thinks insurance or investments is not for me, because first, maybe I don't have that level of income, or I'm not that age yet. So we thought of coming up with a vibrant way of reaching out to everyone, being inclusive and showing that insurance investments is accessible to all, despite their age, despite their income levels, despite their role in society. So that's what we were trying to achieve. And I think we've seen quite some activity since we started this campaign. Of course, we went out in very vibrant colors to just encourage that, even the younger people who perhaps like to express themselves differently are able to, see that this is something that fits them, unlike the traditional mindset of what insurance would be or what investments would be.
And as Joy is coming in, of course, you mentioned the fact that you're targeting the incoming new younger generation, etc. But of course, the fact of the matter is that the market is quite crowded. And you have as many as insurance companies as you can be able to imagine. Yeah. What is ICEA's business competitive advantage?
So as ICEA Lion Group, we are a strong entity that has been around for quite a while. So first off, we've had the experience over the years. The Life Company, which is one of the 4 companies within the group, did celebrate 60 years last year. But then the general company was started in the 1890s. And so first of all, that coming together of the 2 companies forged a very strong and formidable group. But then we also have an asset management company and a trust business that are both turning 40 and 35 that have then over the time then also come through to address various needs. So what ICEA Lion Group brings is, first of all, the strength of the experience in years and even in the clients that we've been serving. We are a market leader in some aspects of the business, like the pension business. We have been serving clients for a while, and we have understood some of these dynamics, and we are able then to see through the eyes of the customer, because that's one of our values, that we want to see and read insights from the eyes of the customer. So as we have done that, as we have evaluated our customer base and looking at our customers, we've noticed some trends, and that's what we've been trying to address. But then the other thing that ICEA Lion Group brings is the strength in the financial position, that we are a very sound entity, the Life Company, having an asset base of in excess of about 180 billion worth of balance sheet, and being the only AAA rated both life and general insurance companies in East and Central Africa, then that then speaks to a strong capital position, speaks to an organization that has a sound governance structure, and having such a credit rating speaks to many things apart from then the financial capability and the corporate governance. So that's what we're bringing differently, and just then also trying to understand what the client is looking for, as opposed to us then pushing what we think is what the client wants.
That's a very decent company portfolio.
Yeah.
And it is the hope that the same is replicated in the service provision and the packages. Now, but I want to look at it from an angle whereby we're coming from a culture of, not so much planning for the future.
Yeah.
Because as a community, as a Kenyan community, largely speaking, there have been other more pressing issues to contend with, like education for the kids, to acquiring assets, and building a house and such like stuff. So people have not been very keen on planning further ahead.
Yeah.
And others have argued, instead of coming with a life plan, let me educate my kids, they shall take care of me. And that has worked as well.
Has it?
As a cover for some.
Yeah.
So how is now the transition, according to you? Because also the times are changing and need to be in tandem with the modern days and ways of living. How is the transition from that kind of thinking to people appreciating that you're not planning for poverty or death or ill health, you're just planning to be comfortable and also lessen the burden from the future kids who don't have to really pay. I call it the black tax nowadays.
I hate being called black tax.
Right.
And that's a very valid point you're bringing here. Now, we have a lot of, back then our parents maybe thought, they maybe our parents or our parents' maybe our grandparents are the ones who knew that once they educate their children, then they're taken care of. But today, even if I ask in this room, I'm not going to put anyone to. But very few of us are able to support our parents because we also, as you correctly say, we also have other pressing needs of our children or even our own lives, planning our lives or carrying out the various goals that we have. And so I think as we do a lot more of the forums or the education or the conversations with the customers and with the clients and with the population at large, people are realizing that indeed my children are not my plan. I cannot depend on them and say that because I took them to school, they'll take care of me. There's been surveys that have been done by the Retirement Benefits Authority, the Association of Kenya Insurers, the KNBS, and even ourselves that indicate that nowadays that dependency on the children has come off, because what's also happening now amongst the retirees is that they're still paying school fees for their children's children, their grandchildren. And so if they were hoping that their children would take care of them, it's now becoming a reversal. So they indeed need to even plan, not just for their old age, but for their children's children. So more need now to look at it and say, so if you didn't even have that income to depend on in old age, and now you might be faced by those other needs, emerging needs of taking care of your grandchildren, then you really, really must have a plan.
So now in view of that, and trying to now onboard everybody, because also it lessens the burden for the family, for the community, makes everybody comfortable.
Society.
How would you say, how wide is the range of your packages?
There's a tag I would use that we have plans from infancy to legacy, and I'll explain that. You've talked about maybe having a child or even having to plan for their education, and for most people, at least at some point, primary school was free. I don't know that it still is. I think it is.
Even the folks who are don't know.
No one knows.
Yeah. But so if you start, by the time you get the child and before they go to school, you have a bit of leeway, maybe some 2 years or so, and you can start planning at that point before they go to kindergarten or PP or whatever. And so by having an arrangement that can allow you, even if it's for those 3 years, we have various plans. We have the easiest that anyone can start off at, what we call a digitrust. That yes, it is set. This is how it looks like, but it will accommodate you at whatever size of wallet. And need I say that even my 15-year-old daughter can have an account in the digitrust, because we also have a junior account, meaning that the gifts she gets from her grandparents, part of it can go into that account. And so from that level, then we go to someone maybe who has a 3-year plan to maybe maybe put a down payment for some asset that they're trying to get, maybe some piece of land. If I speak to the younger person, because for them piece of land may not resonate, maybe they're hoping that they can, or even maybe one who is hoping to, these very young kids who want to buy an iPhone, they can be able then to, put in something for a year, and then they'd have accumulated some funding for that. But then now when we come to this other one who now is thinking, my children are of age, they will need to go to uni, and I need to start thinking about, what if I'm not there, what will take care of them? Then, we come up with what we call a whole of life plan, that I pay premiums for a particular duration, and then I'm covered for life, and should anything happen, those children are taken care of, and those proceeds can be, instead of even being channeled to a beneficiary or to maybe my brother or my sister, if they are listening, I have nothing against them. But then we have what we call trust funds that allow that those proceeds from either insurance or from my retirement savings or from any of the other investments that I've had, even if it's land or even if it's a property that I had, can be channeled into that trust fund. An instrument that is safer and more controlled, that would allow that my children are taken care of. And if I'm being, like him, he looks like those people who will want to take care of their grandchildren. Then
but not at the failure of the children.
No. Just because he wants to leave a legacy for them and even for the children's children. So that trust entity allows that then you have a legacy that outlives you. But in between, you also want to live comfortably. So, and that's why I said even in between the 3-year plans, there's something that you can put in that can take care of you, that can give you good returns, but then that can also ensure that should there be, some ill health, maybe there is a critical illness component, a health rider that comes in. But then again, even on day to day, we go back to that young person who has saved and acquired an iPhone. They need insurance for it because if it's picked on the streets, then it will be too painful. Or if they need to upgrade it to the next Pro Max, they need to have made some plan. And so we have those plans that are able then to accommodate all those. But for me, as I plan to then maybe retire at what age? I don't want to say my employer, but if I plan to retire at 50, I have already maybe started making some plans that will ensure that I have sufficient income to take care of me from
post-retirement.
Me working or me, hustling.
How do you deal with societal issues where the economy is, folks, if they're going to spend money on something, they want to see that thing now. In terms of planning for the future, because of the practices that we see where the survival is of the day, how do you then convince people that you can put something away and you're not going to access it till later when there's a need today?
And that's a discipline that comes now with the kind of plans that we can curate for each of these individuals. One of the biggest challenges of savings is we keep dipping our hand in a cookie jar. Anytime there's anything, look at it this way: if you have money in your M-Pesa or in your whichever money, whatever you use, Airtel money or whichever, and there's a need or someone has a need, you'll quickly just send it, or you live in Fuliza, or you borrow, or if it's in your current account, you'll do the same. So by having some of these arrangements, whether it's a plan in the money market fund, yes, it's possible to still maybe access it maybe in 2 days or 3 days. But by the time those 3 days are coming through, I would have maybe rethought, do I really need to remove this money for this kind of need? But then again, in some of the solutions that we have, if it's a retirement plan or if it's an insurance, a sort of a solution, that you may not keep dipping your hand there. There's a discipline in it, and we do tell you that if you access, then this is what it's going to impact your original plans. So that sort of forces some discipline. As much as, yes, it's important to live now, I'm able then to restrain and not necessarily keep dipping my hand because it is away from me. Yes, you have your statements, you have your, we have all these, the mobile apps that will show you how your statement looks like. You're able to see your balance. You're able to see how your fund is growing and the kind of return it's earning. But then that discipline of it being away from quick access then creates that long-term preservation and the growth of the fund, so that then you're still able to achieve that future goal while still living today. Of course, people want to be able to access as and when they need it. But then as we discuss your plans and as we work with a planner, because we prefer that maybe someone works with a planner to look at what their projects are and be able then to come up with a plan to that, and then help you to stick with it.
One of your latest products is what you call the Retirement Preparedness Index.
Yes.
And as we talk about dipping hands and strategy for later days, what is this index?
So it's an innovation. It's actually an innovation we launched on Tuesday this week. So it's a Retirement Preparedness Index. We carried out a survey to see how Kenyans are preparing for retirement, to see how individuals how ready they are for retirement. And we did, we talked to people in the city and in the rural areas, in different ages, and in the informal and in the formal sector, to just see how well they are prepared and what they're doing. And we got some very interesting findings that for whatever reason, it looks like the people in the formal sector sort of have an idea of how to plan for retirement, but they're not there yet because they keep having some, every time they change jobs, maybe they'll access whatever it is that they have saved. The dipping the hand in the cookie jar, which our regulator, RBA, has been trying to work with us to, try and control that space so that then we can have something for retirement. But a lot of us, when people change jobs, they keep dipping their hands in. So those behaviors then affect the kind of nest egg they would have had. But then also some of the people, especially in the informal sector, maybe because of the irregularity of their incomes, they are not able maybe to have something that is steady. So we can't say that they haven't planned. It's just that maybe they have many different things, but not structured in a way. And so some will say, this piece of land will take care of me, or this house will be my retirement plan. But then from that index, then we realized that, like I was saying, some of the retiree needs then being, meeting children education, meeting healthcare, or even food. Yeah. So without having now a proper structured way, you find that many people are retiring when they don't have enough, or they're not ready even to reach that retirement. The younger people said they haven't even thought about retirement. They're never retiring anyway. They don't plan to retire. Again, someone in the informal sector would also say, I am not retiring. What is retirement? Yeah. And so those, now just having those thoughts and now coming up with them, and when you do that, calculation and see, yes, I have all these savings in the retirement plan in the NSSF, because perhaps that's the only thing that some people have. I have this maybe plot of land or this asset. I have, but then my behaviors, I keep dipping my hand in the cookie jar every time I move, or I save in a very haphazard way. I save this month, next month I don't. I go on a holiday and I decide to eat whatever it is that I had put. Then we realize that then those expenses, people have not even thought about the expenses that will hit them. Even then, in terms of like healthcare, healthcare is a key issue. We hope that by then, the social healthcare would be sufficient. But we still have then to make our own plans. So for healthcare, for food, for basic maintenance, people need to have that idea of what it is that will take care of them. And so the findings were that very few people are ready for retirement. So then what we're trying to do is to help them come up with plans to work towards that ideal space, so that if I, for instance, want to retire earning the same amount of income that I was having even before I reached retirement, then there are some things I must do. And we also then wanted people to understand the value of what we call the compounded effect of, or the time value of money. Meaning that whatever it is I'm putting away today, even if it's maybe, say, 2,000 shillings for the next, say, maybe 10, 20, 30 years for the younger people, it's possible that if it's earning a very basic rate of return of maybe, say, 10%, the 2,000 shillings, without even increasing it every year, could have grown to almost about 4.5 million shillings in those 30 years for the younger person. So as much as they may not see, the need of putting it aside, and they may not even understand, they may not even quantify what they do with 2,000 shillings a month. It's barely their airtime or their bundles, but it is something that can take care of them later, that can take care of either, the healthcare, or their, taking care of their basic expenses. So that's what the survey was about, and we are hoping that more Kenyans will now start planning.
Interesting. Now, building off that survey, of course, a smaller portion is ready and already participating in that. And those are people you're trying also to maintain.
Yeah.
But then this is life.
Yeah.
And, things do happen. Maandamano might happen and get you out of business. Something else might happen and the company shuts down.
Yeah.
So your stable income is interrupted.
Exactly.
And therefore, the premium one may have subscribed to, they are not able to sustain it. And the devil in these contracts is always on the footnote. That's where everything goes haywire, because you realize maybe sometime that the contracting phase, you are not so keen and you are ready and prepared that you're going to sustain it. At some point when there is this interruption of the sustenance of the premium payment, you lose. I've seen even from other players in the market, people losing whatever they had saved along the way. So how is ICEA trying to do it differently, being mindful of this unprecedented event?
Yeah. And you're right. And a lot of people then fear that fine print or fear starting because of that. So what we do, should there be a change in your income levels, remember we talked about having many planners available or advisors available to even guide you. And so should that happen, and we do encourage our clients to always be in touch with us. They can either be in touch with us on our digital platforms or even in our branches. And we do have either the customer service team that will be able then to advise a person, or even our advisors or what we call the planners. So what we do is we look at your structure, we look at your situation, and then we are able then to plan a way of either you reducing the premiums or even putting a pause on the premiums, and at some point you can even reinstate if your income levels or your sources of income change. All right, but then what we usually advise is it's important to communicate, because I think most of the people who then just keep quiet, and I know a lot happens when that change is happening and people forget that I needed maybe to communicate. So we urge our clients to communicate, but what we also do is we reach out, because we will notice this month the premium didn't come, so we will reach out. And as we reach out, we try and come up with a plan that fits the current situation that you're in, whether to make a pause or to reduce the premiums, so that then, or to pause and then with a plan to come back and reinstate. So we do have that conversation with an individual at whatever space they are in, and then we are able then to come up with something so that they don't end up losing.
Right.
Yeah.
So can you plan for anything? Because every time we talk about this, is we want to say, okay, well, I must plan because, Kevin's children must go to school in the future. Joe wants to let's just skip that. But we look at them as stuff that maybe it wants to do, that we regard. But what if people want to does it matter what you plan for? Somebody wants to actually, I've worked hard, and in the next 5 years I want to take a whirlwind of a holiday. I want to be able to send my children to university in wherever in the world, that people might see as luxury today. But can you plan for anything?
Yes.
Does it have to be the brick and mortar kind of,
Yes, you can, because it doesn't have to be that what I've put here must, be for this particular thing. So and that's why we like to work with the planners, so that then, as I have these various objectives, I have the objective of going on a holiday in, at the end of, or, when it's summer. So maybe I have about 6 or so 8 months to plan. And I can start working onto something towards that. Again, maybe if it's something that I'm, projecting that it will take another maybe 5 years, I can work out a plan, either with the investment solutions that we do have, or even with the insurance solutions that can fit that duration that I'm working towards, and then now use those proceeds for that particular objective that I had in mind. If you want to be very strict and say that I cannot access these proceeds for anything else except that particular plan, we can plan with you even in what we call the trust fund, where you are making regular contributions into a fund that I know then this will strictly be for education of my children. So and I dictate how those proceeds will come out, in what maybe tranches or in what durations, towards now maybe uni fees, or and you can plan even in different currencies. You can plan if it's for your children who you want to take to Yale, for instance. So you can have a plan that is saving in USD, and we do have those available. So it depends on where you're at and what it is that you're working towards. Yeah, and like I said, the 20-year-old can plan to get their first iPhone. And they can work towards that, so that there are some solutions that you can access sooner than later. There are others that are then locked for a longer period, and there are others that are very structured, that this is the agenda and this is what it will do. Others are just then, I'm accumulating and I will be accessing these funds as and when maybe the time comes in those either 5 years or 3 years or 8 months, as it may be.
So as we talk about planning for anything, as Ndu calls it, of course, the desire is that ICEA Lion also has a plan for everyone.
Yes.
So how do you deliver on the promise for inclusivity and accessibility?
So remember, I said that we are seeing through your eyes as a customer. So we are looking at you, and you're telling us, this is what I have in mind. And so we help come up with a solution, or come up with a plan that will now actualize that objective, or that dream, or that agenda that you had. Remember, we said that there are some of these plans that we have that can start as low as even 500 shillings. 500 shillings is something that someone can accumulate even over maybe a week or whichever duration, meaning that then even if it's someone in the informal space, or if it's even if it's my 15-year-old daughter, or it's my 70-year-old dad who perhaps wants to do some project in a few years, as much as maybe he's just on the receiving end in terms of being in retirement, there is something that we can work towards that suits you at whatever space you're in, at whatever age, at whatever income levels, at whatever disposable income you may have. We have a plan for everyone.
So with these plans for everyone and for anything, so how does one get started?
Talk to us. So of course the younger people may prefer not to talk to a person, and so in all our digital pages, our social media platforms, we are at ICEA Lion, and on Facebook and LinkedIn for people like ICEA Lion Group, right? But then we also have a rich branch network right here down the road at Tulip House. We have a branch. We have other branches in the city center, about 5 of them in Nairobi, and then we have in Mombasa, we do have branches, 2 branches, Meru, Nanyuki, Nyeri. We go to the western region, Kisumu, Kericho, Kisii. We have branches in Eldoret, in Nakuru. So we have branches across
the country,
and we are on our digital pages. And you can also then talk to us even on email, or even those who want to make a call or visit our head office at Riverside.
As one attempts to reach you, we're in the AI, as you say. Days are changing. Is there a virtual way of one subscribing, or one must come to?
No. We actually have solutions that you can do a complete buy journey. If you go to our plan microsite, plan.icealion.co.ke, you're able to then look at where you perceive yourself to be, and you can look at the various plans there. Some of them have a complete buy journey that you don't have to interact with an individual, like the money market funds, the personal retirement plan. You can do the entire journey without interacting with anyone. Then of course we also have the WhatsApp chatbot that you can also buy even your motor insurance, your investment solutions end to end on WhatsApp. You can also do if you have downloaded our mobile app, you can also do a buy journey on some of those solutions. So we we are accessible, fully accessible for all digital eras.
So, I mean, insurance being one of the an old business in terms of the fact that, people started to latch onto it and could understand the reasoning behind it. Then maybe something would have happened in between. So somebody who is an old customer, maybe for some reason lapsed in between and was not able to continue paying their premiums, as it were. What happens to them in this new plan era if they come back and say, okay, fine, let me dust the dust off of this thing and get back into it? How do they plug in?
Yeah, and so we go back to, hopefully there had been some communication, and it was either put on a pause and it can be reinstated, or we can replan and start the journey on a different platform that suits now their current situation or their current levels, so that then we can reignite the journey that they would have hoped to be on. So we would look at where they paused, see whether it's possible to reinstate or to restart the journey, and maybe whatever it is that they had put up, because as you have said, they are maybe old, perhaps it has already reached maturity, and so perhaps there's something that is available, and use that now as a kickstart for their next journey.
And I'm just wondering, in addition to that, is to ask the question around premium, and whether you have basic, minimum, premium, and maximum. How do these kind of costs look like?
What's your plan?
All right. So I can get one for 500 shillings?
Yes, like I mentioned, we have solutions that allow you to start as low as 500 shillings. And you can also come with your investment club and have a joint account, and we plan for you in the investments. You can, like I said, you can bring your children into the junior accounts in the investment space. Within the insurance space, you need to be of age, at least 18. But if you want to start somewhere, you can start even as low as 500 shillings, even for the personal retirement savings. You can start as low as 500 shillings, and you can do it on M-Pesa, and like I mentioned, on the digital platform end to end.
Wow. Well, I think you need to be loud enough, because more Kenyans need this information. In spite of these tough economic times we are going through.
Very true.
Because at least if people are informed and empowered, then we could start planning.
Yes.
But the bigger question, perhaps this is on a different dimension. As the company grows, you're operating in certain regimes. There's a governance, there's the leadership of the country. And some people are wary, of course. That's why you see sometimes the premium uptake is low, because there is no predictability. There is no telling of what could happen to certain companies once they grow to as big as you have. There is no telling on how that can be affected by now the politics and the government. But supposing we who are onboarded by ICEA Lion at some point wake up to, of course, God forbid, that ICEA is not in operation because of whatever laws are existing in the country. What then? Are there safeguards? Are we insured by the insurer?
Yeah, very true. And so, of course, it won't happen, but should the unlikely, we saw COVID come, black swan events do happen. Remember I mentioned that our strong financial base and capital position is one of the areas then that the regulators have put in place to ensure that insurance companies have some capital requirements for them to, minimum capital requirements to be able to operate in this land. And so that minimum capital requirement is for insurance companies. Their minimum is 100. A strong insurance company should be at about 200. We are at about 280 thereabout in terms of our capital.
Million, billion, trillions.
The percentage, the percentage of what is required as a capital. And so that should be the first layer of confidence that you're protected should any event, even eventuality come. And so for every liability that we are holding, say for every 1 shilling of liability we have 2.8 as a backup should anything happen. So that's the first layer of confidence. But then the regulator also is in place. But then there's also what we call, we've not seen an insurance company, a life insurance company, go under in the most recent years. Yes, there was one back then, but because there's also another kitty that is called the Policy Holders Compensation Fund, all the members of that insurance company, anyone who had a policy in that company was fully paid, even if it took some time. So the regulator has put in measures, but as an insurance company, as a ICEA Lion, we've also put in very strong measures to ensure that whatever black swan events do come or do find us, we are stable and we are here, and we are able then to meet all our obligations even into the future. And even as we keep thinking of planning, we're not even thinking of the next 5 or the next 10. We're thinking of the far future, and we've put plans in place for that.
So even as I think of the far future, I'm thinking about a group of people that we tend to forget in this space, that we try to talk to grown, molded adults about a behavior change or shift.
Yes.
How far would the conversation be if this started when children are learning to count 1, 2, 3 or to read ABC?
You've touched a space, and the other day we were speaking with a regulator in the retirement space, and incidentally today the regulator is celebrating 25 years. I'm meant to be there, but and what the conversations that are going on now is to inculcate the savings or the financial planning in the curriculum, so that it's embedded on the curriculum from as early as possible, so that children, even as soon as they start learning how to count, perhaps maybe they should be counting using money, so that then that behavior is inculcated, and so that even as they get off, going into high school, going into uni, they are well structured in their thought process that planning or financial wellness is a key thing. And we've partnered with some of the learning institutions. There are some financial literacy campaigns that we are running with the learning institutions. And we believe that even if this is at university level, there could be opportunities. And as we continue now with these education programs, we believe that it will change the tide. And over time, then people will be planning better. But should this now be embedded into law, that financial wellness be part of the education curriculum, then that will really, really change the outcomes that we are seeing now, where maybe some of us only started saving when we got into our first job. But had we been structured in our thoughts that we needed to have these plans even right from when we were younger, this is something we would have worked towards. And what you can do perhaps even for your children is start with that junior account for your child. Let them start saving, and for every whatever you give them, even if it's pocket money, deduct something and tell them this is going towards your savings.
Right.
So, that's interesting. So why should Kenyans then finally pick ICEA Lion? As you said, they know where to find you. You've given the safeguard that is proper. But how then we're going into Christmas more? People will be spending. Why should they be lured more to ICEA this festive season and not go and do a very big bash of a Christmas?
Because January is coming.
Right.
Because life will still continue even beyond the holidays, the festivities.
Right.
And so at ICEA Lion, we have a plan even for that January, even for those 2 months. You can still put aside some of your funds into money market, and you can be able then to access it in January to meet your obligations. And so the idea, I think, is to think about both the near future and the far future. As you think about the near future, then there are opportunities for you to do that. And at ICEA Lion, remember, we say our mission is we protect and create your wealth. So we first protect what you've given us, and then we create more for you. So we are trustworthy. We are your partner. We are the company that has a plan for you for whatever plans that you have.
A plan for anything, a plan for everyone.
Plans for everything and plans for everyone.
I just want to look really quickly in terms of how far this has spread. We talk about, mortgages only having hit a certain number. Do we have more and more people who are latching onto the insurance idea in terms of a plan for tomorrow? Of course, against what we had talked about before, where people want a today answer to a today problem. But do we have more people then embracing the idea that insurance for a rainy day actually works?
I think we do. If I even just look at the statistics within the retirement space, the retirement sector, allow me to go back to the Retirement Benefits Authority, because when they started, they had maybe a fund of about the total industry was maybe at about 20 or 50 billion, and now it's at 2.5 trillion. So there's been some growth, of course, the growth of savings, but also the growth of the funds because more people are saving. We have more literacy. We are not yet there. The pension coverage, in terms of the statistics that the RBA has stated, that only about 24% of the population is covered, adequately for, or rather in some way, for retirement. And the hope is that perhaps in another couple of years, it could be at about almost maybe 39% or thereabout. So there is a lot more happening, and all our regulators, and even the other players within the industry are carrying out a lot of financial literacy campaigns, education, and as we do this, not just for our customers but for the larger population, we believe that a more financially well or financially savvy population is people then will be able to make better decisions and will then have better outcomes even as we go forward. So even if we're not looking at insurance at large, but even if we're starting maybe just from the savings point or even from the pension savings, at least we've seen quite some traction in the last couple of years. And we hope that then as we continue now with the education, with the literacy campaigns, with the wellness campaigns, then more people will understand what they need to do. As we have this retirement preparedness index, when you put in the numbers and you see you're not ready, then you will want to make some either additional savings or come up with a solution that can then be able then to get you to where you need to get to.
Indeed. A plan for the future is definitely a plan for success, that's for sure.
Definitely.
And we want to thank you so much for joining us in this conversation this morning to at least show the way and to talk about the trends that are happening in society, but then also to prick us all to make that decision to save for the future.
Thank you.
Christine Mutahi is the General Manager, Business Development, Corporate Business at the ICEA Lion Life Assurance, has been our guest this hour, walking us through those very important plans. What's your plan? Something to think about. And thank you for making us part of your plan this morning on The Situation Room, Kenya's biggest conversation. It was Ndu, Joe, and Kevin with you this morning. Conversations continue tomorrow. Have a wonderful rest of the day. Enjoy your listening.
This is The Situation Room, the only way to start your day.